Hello, everybody. We have a very event-filled day of news, so let's go ahead and get straight to it. And I want to start off with this. Hedge funds just closed almost 50% of their short yen positions since the United States-Japan intervention. Their short positions fell 6.5% to 59,526 contracts in the week of August 11th, and are down more than half since the US and Japan intervened together at the start of the month. Two forces are now working against them. The first is Tokyo. The yen is back at 159.35 after giving up half its gains from the intervention, which puts it close to the level that triggered the last one. Another intervention can come at any time, and anyone holding a short gets hit instantly. The second is the Bank of Japan. Odds of a September rate hike jumped to 81%, which is crazy, over on Polymarket, up from 22% 2 weeks ago. Also insane. Higher rates make the yen more attractive to hold and more expensive to short. And a huge miss on Japan's GDP growth. The expectation was 2%, and in actual, it was only 1.1%, so almost half of that. So Japan now has surging borrowing costs, a weakening currency, and elevated inflation, all while GDP growth is coming in far weaker than expected. That is a really bad combination. The US is printing dollars to stop Japan from dumping $1.4 trillion in US debt. Multiple US-Japan interventions failed to save the yen. Now, Treasury Secretary Scott Bessent is warning the Fed, expand FEMA for Japan or watch the yen collapse and drag the Treasury market down with it. The plan is simple. Japan gives its US bonds to the Fed prints dollars against them, Japan sells those dollars and buys yen. This lets Tokyo defend its currency without dumping its entire $1.4 trillion treasury position in the market. Because if Japan starts selling at that scale, global liquidity disappears. And here's the insane part. The US is effectively printing dollars to absorb the same US debt Japan wants to sell. Japan unloads the bonds, America prints the money, and the Fed takes the debt onto its own books. This is how they are trying to hide a global liquidity crisis. Just in 2 million payments just settled between AI agents on the XRP ledger. Nobody's done the math on why they're there. An agent paying another agent for an API call moves fractions of a cent. Card rails charge a 30-cent minimum. The fee is 10,000% of the payment. Machine commerce is arithmetically impossible on those rails. Run the numbers on 2 million transactions. Card rails at 30C minimum, about $600,000 in fees, so 30 cents. XRP ledger at 0.00001 XRP flat, about 20 XRP total. Finality in 3 to 5 seconds, not T plus 2. No bank account, no card, no business hours. An agent can't pass KYC at 3 a.m. A native DEX on the same ledger, so an agent can swap what it earns without leaving the rail. Humans choose rails on branding. Machines choose on unit economics. They ran the numbers and picked XRP. And huge, nearly $2.16 billion worth of XRP long positions have been added in the past 3 weeks. Fed will inject $16.97 billion into the market starting next week. Liquidity will hit the market for 3 consecutive weeks, which is actually good for crypto. Retail customers will use XRP without knowing it. The mass adoption of XRP does not require billions of people to interact with the ledger directly. Financial institutions can use the XRPL behind the scenes, while customers continue using their existing banking services. The report below explicitly states that financial institutions are the primary users of the Ripple protocol and serve as gateways for funds entering and exiting the network. This means that customers of financial institutions do not need to know anything about Ripple or its protocol. This is how XRP can reach billions of people without requiring billions of people to individually create XRPL wallets. Bond market crisis is hitting the entire world. The Bloomberg Global Long Bond Index yield has surged to around 4.2%, its highest level since July of 2008. Long-term government borrowing costs are now back at levels last seen during the global financial crisis. With governments carrying far more debt today, higher yields are making refinancing increasingly expensive. This is becoming a major pressure point for global financial markets. And this changes everything for XRP, and they don't want you to notice. The SEC just dropped an innovation exemption that lets tokenize Apple, NVIDIA, and other stocks trade 24/7 on blockchain with almost zero full registration. And who's pushing it? SEC Chair Paul Atkins, the same guy who publicly praised Ripple right after their massive court win. Meanwhile, BlackRock's Biddle and JP Morgan have already tokenized US Treasuries on the XRPL. Tokenized commodities and US equities with direct deposit and withdrawal settled in pure XRP via new real-world asset-focused platforms like Trinsic.com. Last week alone, tokenized gold and stocks on XRPL ripped over 10%, all settled in XRP RLUSD pairing. Ripple already owns the full institutional stack on XRPL payments, custody, brokerage, collateral management, and now privacy through DNA on-chain ZK proof layer. The years of brutal XRP suppression looking more and more like the perfect setup for silent institutional accumulation right before the real tokenization floodgates open. Huge real-world asset RWA tokenization is about to hit the XRP ledger hard. The dots are connecting fast. Most people are still asleep. Don't say that you were not warned. And we're seeing very, very low volumes on crypto. This is going across the board. Bitcoin, XRP, Ethereum, Solana. For example, XRP 24-hour volume with USDT was a mere 17 million. So we're looking at this and saying that something looks like it's about to happen soon. Anyone can mint a token on the XRP ledger in seconds. That's the feature. It's also the problem. Tens of thousands of tokens live on the XRPL. Most will never clear a Trinsic.com listing review. Here's what the scan actually looks like. Issuer verification, real entity, real jurisdiction, real accountability. Anonymous issuers are dead on arrival. Reserve and backing audit. An RWA token is a claim on something. No verifiable underlying, no listing. On-ledger forensics, issuer account history, supply controls, freeze flags, clawback setting, holder concentration. Liquidity depth, a token that can't absorb real order flow against XRP does not trade, it slips. Hundreds of candidates enter the pipeline, a handful come out the other side with an XRP pair. Anyone can mint, almost nothing gets listed, creation is the product. The S&P 500 is now at its most overvalued level in history, even surpassing the 2000 dot-com bubble. Warren Buffett warned about extreme euphoria back then. Now he says people have never been in more of a gambling mood. 2 meetings this week could decide the future of crypto in America. The White House sits down with crypto leaders on Wednesday. The CFTC meets on crypto rules on Thursday. Congress already failed. The Clarity Act missed its August window and gets no Senate vote until September at the earliest. For the week, Monday, U.S. stocks open after Iran says the strait will not reopen. Japan's second quarter GDP. Tuesday, U.S. housing market data. Wednesday, White House meeting with crypto leaders, FOMC meetings. Thursday, CFTC meeting on crypto regulation. Friday, Japan inflation data, S&P global and manufacturing PMI. CFTC Chair Mike Selig has already said the agency will write the rules itself if Congress does not. This week shows whether that is still the plan. Over 2 million agentic transactions have now settled on the XRP ledger. AI agents are paying each other directly on chain using XRP and RLUSD as the settlement layer. This is what Internet of Value actually looks like. Important, Fed is not expected to cut interest rates throughout 2026. Odds have pumped to 85.5%, while a rate hike has a 47% chance now. This is not good for markets. This is getting worse. SafePal just disclosed a data breach affecting nearly 40,000 users. 3 hardware wallets incidents occurred in just 1 month. You have Cold Card with over $100 million drained from 5,200 wallets. With Trezor, 14,000 users data leaked. With SafePal, a data breach affected 40,000 users. Yeah, what's going on lately? The yen carry trade could blow up again. Yen borrowing costs are now just 0.91%, making it one of the cheapest major currencies to borrow. Traders are taking advantage of it again. They are borrowing cheap yen and moving the money into higher yielding currencies and assets. The Brazilian real, for example, offers an implied yield of 12.64%. Japan and the US spent around $87 billion defending the yen over just 2 days in July. Yet the yen has already erased around half of those gains. Now traders are rebuilding carry trades while Japan's policy rate remains at just 1%. The bigger this trade gets, the more dangerous the next BOJ hike or intervention becomes. One sharp yen rally could force traders to unwind and trigger selling across global markets. Kevin Warsh is reportedly expected to make no changes to interest rates throughout the year. The question now is no rate cut pump before 2027. What do you guys think? XRP's visibility will be hidden from retail customers during bank transactions. Billions of people will end up using XRP without realizing it. And let's go ahead and take a look at what's going on with the price movement. So as it is right now, we just dropped below $1 again. So on the low on the day, a little bit below 99 cents. Currently, very, very much on the edge of $1. We do have a high at 1.0066. So it's pretty close. It's just kind of hanging out right around that zone. As you guys are seeing on the daily here, we had 5 days of dropping, a little bit of green, red drop, green, red, green, red, green, red, green. So if we close out green today, the question is, will it be green above $1 or green below $1? Because as it is, we did close out yesterday below $1. So that's not great, actually having an official day where it's below $1. A second day would start to form a trend. 3 instances, a strong trend, and suggestively going even further down. The Bollinger Band itself widening out a tad bit more, but just look at how low volume is in general. We do have more volume today than all the volume for yesterday. Moving, I would say, probably we're going to end up with more volume than what we had Wednesday and Thursday. I don't know if we'll end up pushing it all the way to what we had Tuesday. Hopefully this will be a nice green move. But as it is right now, a lot of signs are still very pessimistic. If you just zoom out on XRP over time, you guys see this. It's just progressively dropping. What's going on with the Japanese yen? It's not great. Markets are not great. Still having the war with Iran, not great. Gas prices, not great. Things are not great. But I'm reporting it to you guys. If you appreciate it and you want to stay updated, then please don't forget to hit subscribe and hit that thumbs up like button. I appreciate you guys so much. I hope you have a great day. Be safe. God bless. And we'll see you guys in the next video. Peace.